Hi, my name is Libby Yeargin, and I'm a partner in the corporate group here at Ross McDowell. I'd like to take a few moments to talk to you about key issues to include in an operating agreement for an LLC. They break into three main categories: corporate governance, finance, and breakup of the entity or the members themselves. Under corporate governance, if there will be multiple members in the LLC, majority and minority, it's important to consider whether you will include protections for the minority interest holders. If it's a 50-50 venture, consider deadlock provisions in the event you need to break a tie. Management of the entity. Will the members manage the entity, or will they appoint a manager who will handle the day-to-day operations? Under voting, you need to consider how much will constitute a quorum and how many votes you need in order to pass a resolution. And will you allow things like proxies and voting without an actual meeting? And in the event there is a dispute among the interest holders, do you prefer mediation, arbitration, or what about just going to court? Under finance, how much will each member need to contribute as their initial capital contribution? Will you require mandatory subsequent contributions in the event the entity needs additional funding down the road? If so, consider provisions in the event a member defaults on this obligation. Tax treatment. Typically, LLCs default to sole proprietor or partnership taxation. If you require something different, talk to your accountant and then have that appropriately drafted in your operating agreement. It's also important to consider whether you will have mandatory distributions, and if so, how often. If you decide not to have mandatory distributions, determine whether you would at least consider tax distributions to cover a member's potential tax liability at the end of each year. And then finally, breakup. You should include provisions in your operating agreement that restricts a member's ability to transfer their interest to a third party. For example, will you have a right of first refusal for the company, or what about the other members? Drag-along rights or tag-along rights? It's important to include a formula or evaluation method to determine how much that member's interests are actually worth. And then finally, you need to include the certain provisions or triggers for a dissolution or a termination of the entity altogether. If you have any questions about any of these provisions or anything else to include in an operating agreement, please don't hesitate to contact me or any of my colleagues in the corporate group here at Ross McDowell.